joining us this evening. All right, I'd like to thank everyone for taking your time to join us for this session today, where Global and PhillipCapital is sharing this new ETF IOP, and also there'll be some sharing on the market outlook of the China market itself. Okay, so I hope you have enjoyed the dinner for those that are here physically, and for those that have joined us on the Zoom, welcome. Right, so I'll start off with a very simple sharing on the promotions that we have, some simple promotions, as well as how to actually navigate our platform to register for this IOP itself through our platform. Okay, so for those that are here physically, I also hope that you have went to the back booth to actually collect this collateral. You can see more details of this ETF from this marketing collateral at the back, right? Okay, so let me begin. Okay, so the first promotion is basically if you are already an existing POEMS account holder, do remember that you can refer your friends and family members who are not yet account holders to open account with us. So if you use this special unique referral link that's tied to your personal account, all right, then you can get a reward of up to $68 per account that you refer to us for the PhillipCapital. 680 is for 10 clients. You refer 10 clients. Each client 68. All right, for margin account, all right, you then have this current existing financing rates. So you find that you wish to actually engage in the higher dividend yield kind of investments that give you better investment yield of 4.5%, for example, it is 6%, 7%. You can potentially earn a positive carry as you are earning higher dividend yield than what you are paying in interest. So that can be also another alternative in your investment decision making as well. Right, so of course, even though the Fed rate cut may be delayed slightly, but likelihood is still a downward trend for interest rate environment going forward from 2.5 to 2.6 as well. Okay, another one is we do have this market debt. Right, so market debt itself is ongoing. Right, this enhanced market debt 3 is extended itself. It's until end of 2026 November, I believe. Right, so if you're not yet enjoying or not yet utilizing this market debt, you can take a look at how can this actually add on or add value to your trading of the SGX market. Right, so of course come to this IOP itself. Right, so we have the Lion China Merchant CSI Dividend Index ETF. Right, so it's a collaboration between Lion Global and also this China Merchant Group funds. Right, to launch this ETF. Right, so this promotion will be until 21st of March 2025, right, as starting from today. If you register for IOP, you get $12, $12 cash credit for every 5K invested, up to maximum of 600, right? So that's a cash reward that you have if you subscribe to the IOP itself. So if you, after understanding more from today, and you find that you're interested to register, I'll share later on how to register for IOP on our POEMS platform, right? Yes, so you have up to 21st of March to register for it as well. Okay, last one is that we have this Telegram group. If you have not yet joined us on Telegram, do scan the QR code. We do actually update on market events and market news over there, right? So you can actually also see and stay updated with the market business environment. So now let me just share on how to register for the IOP. Right, so this is our homepage. Let me just share the screen first to the audience on Zoom. Right, so should be on. Okay, so this is our homepage. So if you see on the homepage itself, on the fourth one will be this ETF IOP. Right, you can click on find out more. All right. Okay, so this is all the information that you can see. Also, after today, when we share finish, if you start to relook on the information, you come to this page as well. Even the promotion will also be showcased here. If you scroll down, there is 2 links as well, not only the component constituents, which later will be shared by Shin Xiang also, but also on the pitch book as well as the prospectus is available here as well as the term and conditions that is applying. All right. So when you apply, very simple. On the homepage on the very top, there's a invest now. You click on it. You go to the login page. When you log in, right, so if you log in, right, it will get you directly to the page where you register. If you forget and you log in by yourself, without clicking on the link, very simple, under account management, under stocks, go to order online forms, right? You will see this Lion China Merchant, the CSI ETF IOP option here. Click on it, highlighted in blue, press on apply. Right, once you click on apply, you will see your details on top. Do ensure that you're using the correct account if you have more than one account to your name, right? So you can actually ensure that you are logging into the correct account type. Later on, I'll be mentioning why, but basically first, look at the amount in issue price $1 per one, right? This choose the amount of quantity to apply for. Minimum is 1,000, increment of 1,000 as well. Okay, so every 1,000 onwards. Okay. It's only available for KC, CC, MMD accounts. So basically, all these, right? What it means is that as long as you have an account with us, as long as it's not gyro linked, it is not a cash trading account, all right? You are eligible to apply for it for most of the account types, all right? Unless you are using a poly unit trust account, then you must double check with our colleagues. Okay, so if not, there's this amount. Transfer fee over here, this is what I'm referring to. So if you are a cash management account like myself, when I log into my own personal account, transfer fee of $10 will apply because you'll be transferring this ETF shares to your CDP account, Central Depository with SGX. But if you have the account with custodian with Phillip, meaning with Cash Plus, margin account, for example, there is no transfer fee involved for your application. All right, so totally free of cost. Only transfer fee applicable if you're using cash management account linked to CDP. Okay, so I mentioned here again, cash trading is not eligible. Okay, in case any of you are cash trading, verify for the tick below the two options. Once you tick ready, you can key your password and then submit for confirmation. Okay, so this is a process for registering for the IOP for the ETF. I hope it's clear. If you have any questions, feel free to let us know. Not to worry. At the end, later on, Xin Xiang can also take some questions. We can revisit this if you need a refresher. If you feel like you're going to definitely want to register for this IOP after what he has shared. Okay, so without further ado, let me pass time over to Xin Xiang to share more about the IOP itself.
Okay, good evening, everyone. Thank you for joining us today. Hope you had a wonderful dinner and also enjoyed the dinner. I'm Xin Xiang from Lion Global Investors. You can call me LGI's ETF guy. So today I'm very proud and glad to share with all of you about our 8th ETF, which is the Lion China Merchant CSI Dividend Index ETF. So right now on SGX, we are really the ETF issuer with the most number of ETFs. We have our own Magnificent 7. We already have 7 ETFs. So this is our 8th ETF to make it an auspicious 8th. So to some of you who might not know Lion Global Investors, we are part of OCBC Group. Within the group, we have, other than ourselves on the asset management arm, we also have Great Eastern, Bank of Singapore, and also OCBC Bank. So we are one of Southeast Asia's largest asset managers today. We manage around 70 billion Sing dollars of assets. We started our ETF journey back in 2017. When we launched our first ETF, which is the Lion Phillip S-REIT ETF. So this ETF today is the largest S-REIT ETF on the SGX. And we started back in 2017. And since then, between 2020 to 2022, we launched 3 ETFs within 18 months. And this was where we actually exponentially grew the business within this period. And then in last year, we actually listed 3 ETFs, which is the Japan Active ETF, Effect Financial ETF, and also our Emerging Asia ETF. So if you notice, if we apply the cutoff as of the end of last year, 5 out of 7 of our ETFs actually received these respective awards in SGX. So these 2, for example, we launched it last year. This was the first active ETF on SGX and Singapore's first AI-powered ETF. And this was our Effect Financial ETF, which actually pays 5% per annum quarterly distribution. So because of this, SGX gave us these 2 awards. And our ETFs are also within the top 10 ETFs held by retail investors. 2 out of them, out of the top 10. If we zoom into the segment of SRS, 3 out of our 7 ETFs are within the top 10 held by SRS investors. And we zoom into further in terms of trading volume. In end of last year, we were actually 3 of our 7 ETFs were within the top 10 based on trading volume. So in the past, actually, we only had 2 within the top 10. So with the addition of our APAC Financial ETF, 3 out of our ETF were within the top 10 among the in terms of the actively trading volume based on what we have in SGX. And all these are because we are Singapore headquartered, we are Singapore Inc. So because of this, we have a commitment working together with SGX to develop the Singapore ecosystem, investment ecosystem, and that definitely involves ETF, where we build quality and also relevant and innovative solutions for investors like all of you together with myself. And right now, we have seen a lot of headline news about China recently. I mean, before CNY, we have seen DeepSeek, the launch of DeepSeek, and after that, there was a tech rally happening within China. There's a lot of recent news about China, especially with the recent Liang Hui that happened. A lot of stimulus measures are being rolled out within China. So because of this, we believe right now, at this moment, perhaps it's a time to reconsider looking to China, which has been volatile, to be upfront, in terms of over the years, what we have seen. But also, at the same time, right now, they are showing more and more bright sparks and green shoots within these periods. In terms of the broader picture, China is the world's second largest economy, also the region's largest economy. It's also expected to overtake the US to become the world's largest economy by 2030. And in terms of GDP growth potential, it's still expected to be higher than what we see within the world, APAC, and also US. It's still expected to overtake. And recently, what has been announced within the Liang Hui, the growth target for China has also been set at around 5%. So last year, it was also 5%. This year, they expect to set it at also around 5%. So we are seeing a lot of ambitious growth targets being exhibited by China and its leadership, and more signals will also be unfolded because the Liang Hui only started last week. In the next few days, the Liang Hui will be ending. So there will be more and more news and signals being rolled out and also announced by the Chinese government. And right now, at this timing and this moment, what we notice is that China equities actually look attractive. We compare them to China bonds or even US equities, which are, even with the recent polls, is still at overvalued territory. So if we look at the most major economies, right, like US, India, Germany, Japan, and also China, the monetary policy within China is regarded to be actually rather expansionary, especially with the recent yield on the 10-year government bonds dropping to a low. So all these, they are slowly, the all-time low actually happened back in 31st December. They're slowly picking up. And among the world's 4 largest economies, China's 10-year yield is still regarded as the lowest. And all these are lowering the risk-free rate for China. And all these, because the risk-free rate is lower, there's this equity risk premium, which is increasing. And what all these are enhancing is attractiveness over US equities or also China government bonds. And we notice that when there are all these spikes within this equity risk premium, they precede a lot of equity rallies that happen in China. So the most recent example is what happened in September when there was a rally, and there were actually a decade high of equity risk premium that happened in August. We are witnessing almost the same phenomenon recently because after the recent increase in all the stimulus being rolled out, all these equity risk premium actually are repeating in terms of the high. So we are receiving a lot of seeing a lot of these rallies, potential rally signals that are happening within the China equities market. And on the broader front, China's government is also proactively stimulating the economy. So Wei Liu himself mentioned that the recent surge in all the market stimulus marks a historic turning point. So Wei Dilo is the founder of the world's largest hedge fund. President Xi Jinping himself also mentioned they will reinforce support into China's economy into 2025 because they will fully complete the 14th five-year plan, implement a lot more and reinforce more support for the economy. So you notice that especially in the past few months, there's been, especially in September, October, after the stimulus was rolled out, there were spikes. Then after that, there's been some different changes. But recently, after the Liang Hui, there's been some spike after the recent rollout of stimulus. And we expect all these to further continue for the China equities market. And we have done all it takes, rolling out numerous measures. For example, in Q3, they launched the reserve requirement cut in around 27th of September. They cut it by 50 basis points, which was actually a very large cut in comparison to their previous cut. In terms of housing, they've done a lot, for example, like removing home purchase restrictions within Guangzhou, which is one of the top tier one cities within China. In terms of fiscal policies, they are expanding the use of special government bond proceeds to be able to fund the economy. And also all these they are actually issuing more and more special bonds this year to be able to further reignite spending and also reignite investor confidence. All these are doing a lot to, showing a lot of signals to be able to stimulate the economy and also increase investor confidence within this area. And in China, I understand a lot of people think, okay, well, it's a very volatile market. And because of this, that's where actually this key picture comes in. Dividends. There can be a lot of volatility, a lot of market up, market down. But actually, if you have a product that actually pays out dividends, you get to lock in some of the capital gains, even when there are certain upsides being captured. So this way, actually, dividends help to investors lock in capital gains regardless of market up or market down. So, for example, for this index, which is the CSI dividend index, it actually has a much higher dividend yield to be compared to SCI. As of the 28th of Feb, the difference is quite big. It's a 1.8% difference. If you compare it with China's national benchmark, the CSI 300, the CSI dividend index is more than 1 time higher than CSI 300. And we compare against S&P 500, which is quite tech heavy in terms of weightage towards the Magnificent 7, it's almost like a 4 times difference. So all these are important because they help investors lock in capital gains when there are market ups and market downs. And in terms of price to earnings ratio, it's trading at a huge discount. If we compare it with China's national benchmark, it's almost like 1 time difference. We compare it to the STI, it's almost like 1.5 times difference. And we compare it with S&P 500, almost 2 to 3 times difference. So it's trading at a heavy discount compared to the benchmark of Singapore, of China, and also of the US. So all these are actually good and advantageous signal, showing that they're sitting at an attractive entry point, because while waiting for potential price appreciation coming from the different government stimulus, this index actually also pays dividends. But this ETF will also pay dividends. So they help investors lock in capital gains and receive income, while at the same time still wait for potential price appreciation. So this is what this ETF is about, offering you the advantage of consistent and steady income while waiting for potential price appreciation coming from the Chinese government stimulus. So this ETF is the first CSI dividend index ETF listed outside mainland China. So in mainland China, there's actually 5 or 6 of this CSI dividend index ETF. There are a lot of Chinese asset managers tracking this index. We are the first to bring it outside mainland China. And of course, working with China Merchants Fund Management, which is one of China's largest asset managers. They also have a bank, which is China Merchants Bank, is one of the top 6 banks within China. And they in fact also have a securities arm, which is China Merchants Securities. So they are involved in providing a lot of liquidity for the ETF. And it tracks the CSI dividend index, which consists of 100 Chinese A-shares with high cash dividend yield and also stable dividend payout So among this, you will notice that among this investment or index universe, the key criteria is the index must contain constituents that continuously pay cash dividends. So it's cash dividends, it's not stock dividends, because sometimes you can just cancel away stock, cash units outstanding, but continuously paid cash dividends over the past 3 years. So this to ensure consistent track record in terms of dividend payment. In terms of the index weighting, you will notice that constituent weightage cap, a securities weightage cap of 10%. And if the constituent is lower than 10 billion renminbi, this weightage cap is decreased to 0.5%. So what you get is, in the end, that it will be a lot of large cap constituents, those that are mainly the safer names that are captured within this index. So you track the portfolio with the larger cap constituents, those that are the safer names. And to be upfront, a lot of these, they are China A-shares. We are Singaporeans, we might not know China that well, but tracking a portfolio of 100 Chinese A-shares, I think is advantageous, because although we don't know the market that well, there's diversification. Because 100 dividend titans, 100 large cap stocks, which actually consistently pay out dividends. So this is what you get, a portfolio of 100 constituents. Based on constituents that have continuously paid out cash dividends in the past 3 years. And there will be ongoing adjustments made for corporate actions such as spin-offs or mergers and acquisitions. So there are 3 key features about this ETF. Nicely summarized into CSI, because it offers consistent and steady income. So in terms of consistent, proven track record of consistent dividend payment in the past 3 years. In terms of steady, these companies are steady, typically having strong cash flows and high free cash flow to dividend coverage ratio. So this ensures they are able to meet their dividend payout ratio and distribute profit to investors. In terms of income, because of all these dividend paying features and also the track record history, they are able to help investors assess a diversified portfolio of dividend paying stocks, generating this passive income stream for investors. So since 2021, especially in the past 2 years, the cumulative return, they have outperformed the China's national benchmark by a huge percentage. So during this period, if you actually held China's national benchmark, you have lost money. So you have lost quite a bit of money. But if you held the CSI dividend index, you would actually have made money. And at the same time, they have outperformed the China's national benchmark. In 2024, 2025, it started at a higher base. So because of this, at the same time, CSI 300 actually started at a lower base. So with all these, there have been a lot of cumulatively outperformed for the CSI dividend index. And this is important because regardless of all the different market ups and downs, the dividend yield, the dividend paid by the CSI dividend ETF is high. It cushions against market downturn, also at the same time volatility. And these are the index characteristics. You will see that majority of constituents are listed within Shanghai Stock Exchange, which is one of Asia's largest stock exchanges and also one of the world's largest. In terms of sector breakdown, you will see it's diversified across numerous dividend-paying sectors. A lot of them are traditional and mature industries. For example, like financials, that's where actually there are a lot of high dividend yield stocks, and also energy, and also industrials. So all these a lot of them are cash cows that have been consistently paying dividends, cash dividends in the past 3 years. So these is the underlying ETF dividend yield history. So it has maintained an average dividend yield, net dividend yield of more than 4.6% in the past 4 years. So right now I will pause here because some of you, because I want to have a price giveaway question. So previously I mentioned about 3 key features about the ETF, C, S, and I. So maybe this time I start with the vectors. So what is C out of the CSI? Yes. Consistent. Thank you. The next one, what is the S? Yeah, I think this one, the back. Yes, thank you for being steady for this. Thank you. And in terms of the next one, oh, I haven't say your, yeah, yeah. Thank you. So this is what this ETF is about: consistent and steady income. So I'll add in one more question because I want to give a deep dive about one of the top 10 constituents. This time I go to the back to ensure more audience participation. I want to talk about one of the constituents. This constituent starts with C. Does anyone want to guess? Yes. Yeah. Thank you. So I'll be deep diving into Costco because Costco is an interesting constituent. It's one of the world's largest dry bulk carriers, also one of China's largest shipbuilders. So among these, this is one of the more interesting ones. The other interesting one is actually this Hailan Home. It's actually the Uniqlo of China. They have been massively producing a lot of menswear. So even up to the extent they actually opened an outlet within JB, within Johor Bahru. And I know this because during one of the weekends I went JB, then I was looking HLA. They even expanded all the way until Southeast Asia, and they have a lot of outlets. But this Costco shipping, I feel, is actually more interesting because it's one of the largest dry bulk carriers within the world, and also one of China's largest. So Costco Shipping, this company, is actually a leading global shipping and logistics company in China. It's a state-owned enterprise. So because of this, it's technically there are some backing by the Chinese government. So and all these, especially in the past few years, we've noticed that based on all the earnings and financials, they maintain a dividend payout ratio of around 50%. So it's actually quite a pretty high ratio they maintain, and while at the same time consistently paying out dividends, paying out cash dividends. And in its operating revenue, we compare between Q3 of 2023 and Q3 2024, it showed an increase of more than 50%. So this reached up to 73 billion RMB, which is at around 10 plus billion Sing dollars. And if we compare it in terms of the share price from January 2023, you will notice that it was around $10 plus. Then today it has risen up to around 15. So it has risen technically like around 50% within past 2 years plus. And all these actually are still below the analyst average target price. There's actually still around like 20+% in terms of upside potential being identified by a lot of the China sector analysts. So this is what we notice is an interesting constituent, which is expected to actually further benefit when there are more, because there'll be a lot more shipping volume that might be happening with all the trade activities we've seen. So this could be a constituent that could benefit. And this also illustrates and reinforces the importance of having constituents that consistently pay out dividends. So at the same time, as investors, we get to enjoy consistent and steady income. So to conclude, the Lion China Merchants CSI Dividend Index ETF is an opportunity for a lot of investors to earn consistent and steady income. So the initial offer period is happening from 10 to 24th of March. Listing will be on 28th March, tradable in 2 tickers, INC and also ICH. INC is the Sing dollar ticker. ICH is for the CNH ticker. So before I end, I have 2 prize giveaway questions with very, very easy to answer questions. So first question is, what is the Sing dollar ticker for this ETF? Yes. So INC stands for a lot of things. Can stand for income and so potentially increase. The other question I want to ask is, when's the listing date of this ETF? Oh, yes, 28 March. It's like 18 days later. Thank you. So we hope you take this opportunity to earn steady dividends and also invest in income. So welcome Q&A for any questions. Or there are 100 constituents within this ETF. Yeah, there are 100. Yeah. Yeah. So it's intentionally to create this kind of diversification for investors because like what you rightly pointed out, actually the top 10 they add up to less than 20%. So it's spread out to a lot of different names. In China, a lot of the companies they are actually very large cap companies. So there's not one that's super large until they can fit into a high percentage to take up the full 10% in terms of securities weightage cap. So you notice actually there's a lot of diversification being offered within this ETF. HLA and then you go to the one. There's a Mid Valley there. You can take a look. KL they also have one. Yes, there will be this ETF. There will be an annual dividend. The first dividend will come out. Will be expected to be announced in December. Yeah, December of this year. The projected, because so based on the index dividend yield, all these we have seen so far. I mean, to be safe, because Singaporeans we are more kiasu. Based on all the dividend track payment, track record, and all those, expected to be more than 4%. Expected. But because right now the index dividend yield is already at 6.4. We are a bit kiasu lah. We just set buffer 4%. Yeah, just follow his steps. And what's more, the thing is like what Anzi mentioned, there's a promotion. Every 5K you invest, you get $12 cash credit. If you want to answer?
Yeah, the cash credit will be credited into your trading account. So based on the trading accounts that my colleague Juan Che mentioned earlier, the cash credit will be credited into your relevant trading account.
For the LP itself, there's no commission. So if you apply, unless you apply with the account with CDP linkage, which I mentioned, then there will be the transfer fee of $10 plus GST. But if not, if you are applying through a custodian-based account, like Cash Plus margin account, right? So basically, there's no cost in applying for LP itself. Plus, you will get this cash reward entitlement, right? You still get the reward. Just that, of course, you offset a bit of your fees, because your fee is $10, right? So now, if you apply for at least 5K, you will then manage to offset the transfer fee in a sense. But the minimum application amount is 1K, not 5K. Just that to be eligible for the promotion is 5K. Yeah. Okay. No, for okay, so if you sell shares and it goes credited back to your bank account, then likelihood you're not having a cash management account. You're having the cash trading account, which is not eligible to apply. You have to have a cash management account, a custodian account, or a prepaid custodian account. Cash trading account cannot. Yeah. SRS cannot buy now for IOP. You can buy after it is listed. Right? SRS can purchase the ETF after listing date. All right? Yes, sir? Export driven. Sorry? Or impact on tariffs?
I think the impact on, okay, in terms of the things that in terms of most of it I would say would be under materials, because it's actually where actually a lot of them will be showing exposure to potential tariffs, because a lot of these materials, they are purchased by importing countries to go and make, as raw materials, to go and make their own finished products and also services. But it's only, you will see actually it's only at around 2.4%. So that's where actually you see the power of having important diversification, sector diversification. The rebalance happens every December, every year. Yeah, once a year. But at the same time, you see that you'll notice that actually the percentage of each constituent is actually being quite low. And at the same time, actually, okay, the Trump tariffs actually hit every different sector, a lot of different sectors. So with this, actually, this is where actually you having exposure and participation across different mature sectors. That dividend paying will be important, because even if they get hit, you still at the same time still get to receive dividends. So that's a different thing, the unique feature of this ETF and also this index.
Sorry, can you go back to the previous slide and explain the history? No, not this one. The graph that has, yeah. So what is this? Yeah. So what is the what do you mean with the average yield?
The average meaning from this November 2020 until February 2025, during this long period where there's been some volatility, the average net dividend is still above 4.6%. Yes. So you notice that actually there were periods where it hit actually 7%, around 7%. So there's been a lot of track record by the CSI dividend index here. Yeah. So that's why I was just being safe by saying expected dividend yield could be above 4%, but the index dividend yield right now is already 6.4%. Yeah. In terms of the, okay, this is at the ETF level, but you're right that there can be trading commissions. But if you buy during IOP, it's actually zero commission, and you still get cash credit due to the promotion. It's only when you sell, then you might incur some transaction fee. But if you buy during IOP, you enter at $1 thing, then you at the same time you don't get trading commissions, and you still earn the different cash credit. Yeah. 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 Actually, if you notice, actually this one is at around 5+%. Is at around 5+% in terms of the 12-month net dividend yield. What I was showing in terms of the index dividend yield was as of 28 Feb. This is as of the 12 months. It's 12 months. Weighted 12 months. So that's the difference. Because this one is this 5+% is an average of the past 12 months. So for example, for February, from March 2024 to February 2025. So that's the difference.
So along the way, of course, now we do have some questions from the online audience. All right. So there's one is how do I check the CSI dividend index performance online now?
Actually, in terms of if you want to check about the index, you can go to the CSI China Securities Index website. That's where you can because they publish a monthly fact sheet about this index. So it's available on the index provider's website at CSI. I think it's
China Merchant Funds, the website, the main website. Yes. Second question is the dividend distribution. So I think the question is regarding whether it's monthly. But I think just now Shin Xiang actually mentioned that it's a yearly annual dividend distribution. Of course, the dividend yield as of current pricing is around past is around 6.4%. But because they are distributing at the end of the year this year, so depending on the price you actually purchase and as well as the dividend distribution along this year. So the fluctuation might be some fluctuation in terms of the dividend yield itself based on your entry price. Another question is what's the difference between Costco shown in the ETF versus Costco in Singapore? So I think quite different also.
I think it's actually these companies actually is actually quite different. The one in Singapore is from this one is the China SOE. The one in Singapore is actually a complete. They just happen to have the same name, but it's actually two different companies. The other one is a shipping company owned by a Hong Kong tycoon. This one is China state-owned. They happen to have the same name.
Yeah, so this one is actually a state-owned enterprise, in case anyone is confused about the ownership. Sorry, question, anyone? Let me see if there's any questions on the online audience as well. Okay, any other questions that we have from audience? Do anyone need me to go back to the page on where to register? Do you need me to go back? Sure, okay. So I'll just share again. So in case any of you are wondering where to register, right? So let me just share screen. Okay, so this is the
introduction for the funds for LP. When funds need to account, I so that will what okay. So you say so so to receive funded by the first, which is the final of the application. So in turn, put money earlier, get some funds that will deposit the treatment. So 5 p.m. okay. We have I don't know should be, should be, should be something. Okay. Some of them. Match is the first. Initial fee is at 0.5%, 0.5%. Yes. Yeah, but no, that is an upward bound. In case one day we need to, for some reason, usually we won't, as a track record, we have never increased management fees for our ETFs. So we intend to keep it the same for the long term, for 0.5% for this ETF. The key assumption that also, if there are questions regarding the application or regarding the fund itself, we want to clarify with Shin. Yep. No, we're going through our platform for the CDP. It's not an IPO per se. Yeah. So if you only apply through the participating because your feeling is small. Yeah, then I think your holdings once you apply, will it be customized as CDP? So if you apply through a CDP account, which is through a trading account without the CDP, and CDP, that is why there's the $10 transfer fee itself. Okay? You can apply through cash trading. Right. So cash management or custodian account or cash plus account, UP account, all can apply. Only cash trading cannot apply. Right? So cash trading only cannot apply with purpose. There's no ledger to hold the funds, so you cannot deduct for the deduction of funds itself. So you cannot deduct from gyro. You must have the money in the account already to deduct. Right? So either you can convert to cash management for this cash trading, or you open a separate account to apply for it so that you can go up into a CDP also and continue using the cash trading account for green trading. It can be also done. We're not sure for your trading team, either the green team itself or your trading lab. Right, so we are all able to assist you on this request. Any other questions or clarifications? So for those that have no question, it's fine. Now that she's in here today from Lion Global, so it's not very. I think to invite all of you to actually share more insights. So if you have any questions for the fund, not only for this fund, also if let's say you really want to ask on other funds, you also look out for some of his colleagues over the back. You will not yet collected your information for ETF. You will look for his colleague over the back as well. Okay. Well, thanks everyone for joining us this evening. I hope you're successful. And I hope we will be able to see you when you apply for this ETF.